The December rate cut odds just dropped to 45%, up from 95% last month. So this is a pretty big market mover. In this video, I want to go over the futures analysis about the ES rebound and the gold reversal. My name is Eli. I'm a professional option trader. So let's begin with the video. So gold and silver. The trend is really not clear. It's possible consolidation, but prices have been moving up and down. At the same time, volatility is pretty good, and there is a critical reason for our price to increase and decrease, and it all depends on the rate cut in December. And as we know, we don't know much currently, and the news are pretty critical. So for me, there's too much uncertainty due to the lack of economic data and no actual certainty regarding the December rate cut, which I believe in Wednesday there's a Fed meeting, so we might get some clues as to what to expect in December for the rate cut decision. For copper, the trend is a side trend. The volatility is pretty good, and yeah, again, the same reasons for the price to increase and decrease. It depends all on the rate cut. Rate cut are usually very bullish for metals and for gold, and copper obviously is an industrial metal. So the news are pretty critical, and for me, I just need to wait and see until there's way more certainty in the market. Next, we have crude oil. So it's a pretty big side trend for crude oil, but volatility is pretty low. Now, there are a few critical reasons for the price to increase. Ukraine keeps attacking Russian oil refineries, and obviously, again, December rate cut. And the rate cuts for crude oil are also pretty bullish because they can create more demand, and therefore will be more demand or cheaper money, and then will be more demand for crude oil. And the dollar will go down, which in turn get the prices of crude oil upwards. And there's also a critical reason for the price to decrease, and it's ample global supply. And again, December rate cut. If nothing happens, price might drop. But at the same time, the biggest thing is the ample global supply. It's been kind of the narrative for the past few months. For now, it looks like it might not be an issue. It's hard to say. So we'll see and wait at least until Wednesday. And the news are pretty critical, so there's no clear direction currently, and it's too much uncertainty. Now we have wheat. The trend is not clear. Volatility is pretty low. And yeah, there's a critical reason for the price to go up or down. And these news are critical. So we're basically waiting for confirmation from China to purchase US wheat and soybean, as you will see on the next slide. And if China will not be buying the wheat, then we are in a territory where there's ample global supply of wheat, and China is also not buying wheat from the US, so price might keep on dropping like it's been dropping for quite a few months. So no clear opportunity here in my opinion. It all depends on China. And like I said, with soybeans, it's actually an uptrend because there's a high expectation from China buying a lot of soybean. They have placed a few orders, but none of them are massive orders, which is what the market is expecting. So if they fail to really get those big orders in, then price might really drop really quickly, right? So there's no clear opportunity here in my opinion, as it all depends on China once more. Now let's go over the graph and see what happened with ES on Friday. ES futures dropped 1%, almost 1.5%, I think, at the lowest point on Friday, which is the day I'm recording it. It's almost 2:50 p.m. And it's just gonna reverse all the way back up pretty quickly. You would think something like this would take maybe a day or two to happen, usually a day, but it's kind of the same thing that happened on Friday, November 7th. Now, just 1 week apart, Friday, November 14th, we have the exact same behavior. And this is probably ahead of next week, where we have some big tech earnings. One of them is Nvidia, of course, and Nvidia is a big chunk of the S&P, relatively speaking. So quite crazy. Nobody really knows what's gonna happen with the rate cut. As we saw, there was a massive drop on Thursday in price, and this was because the lack of economic data, and then obviously the rate cut odds went down. I think it was to like 60% on this day, and then 50%, and right now we're sitting at about 45 or 46%, I believe. This is at least what the analysts say. So we'll see what's going to happen. I wouldn't have anything open really, or I will hedge very heavily to the downside on the S&P if I have any puts positions open. I don't have anything open other than purchased treasury bills. And this is just because until Wednesday, we don't really know what's going to happen. The market is probably going to be looking for clues of what's going to happen. And you can also see the same thing with gold. Gold went up pretty much right up like crazy from Monday, and Tuesday was kind of neutral, and then Wednesday also went up quite a bit. And this was for hopes of seeing economic data that will boost the prospect of a December rate cut, which again did not happen. We don't have any economic data, and the odds went down, so price just dropped really hard, right? And also it did recover a little bit, but gold is really sensitive to the rate cuts. If there's a rate cut, it's pretty bullish for gold, and obviously this is a day and age of a lot of hype and expectancy, and usually if something doesn't come to existence, or it doesn't, what is anticipated is not what ends up happening, price reverses pretty quickly, which is what happened with gold specifically. So it's also pretty good to follow gold, and you'll be able to tell approximately what are the odds of things of over rate cuts, aside from the analyst odds. Thank you again. If you have any questions, let me know. This should be a pretty interesting few days. Hopefully next year is going to be way more calm, and we can make some money way easier. We don't have to stress as much. Thank you again, and I will catch you in the next one.